speaking of unknown, it seems to me like there's been a new kind of policy proposal to help the economy every day from everyone. But I think kind of at the core, we've seen the CARES Act, we've seen stimulus checks. And could you kind of give an overview of how we've responded to this and
For
what we've
sure.
been
So
targeting?
we've responded, I think, just like the unraveling of the economy has been faster than it was in 2008. I think the federal policy response has been pretty dramatic and pretty quick as well. And so we started out with a pretty limited response that was, appropriated a little bit of money for pure healthcare spending and some paid leave provisions. But then the CARES Act, which was passed now, I guess, about 3 weeks ago, really involved pretty dramatic action. So the total size of the package is between $2 and $3 trillion, and the big components are: one, an expansion of unemployment insurance for workers, right? So including an additional $600 per week in benefits, which is really a big expansion of the unemployment insurance program, because usually the average payment is something like $300 a week. And so this almost triples that. And so that's a ton of money. It runs through the end of July. And so that's a lot more money for people who've been laid off. And a lot more people are eligible now for UI under the CARES Act expansions that normally would be. And so that's number one, right? So for the people who've lost their jobs, more generous UI benefits with wider eligibility. And they're also of extended duration. So they've added 13 weeks to the back end. Then secondly, we have stimulus checks at $1,200 for households below certain income levels, but reasonably high income levels. So this goes up to maybe the 75th or so percentile of the income distribution. So lots of people get a $1,200 stimulus check. That's the sort of second part. So that's money for people who've lost their jobs, and then secondly, money for everyone except for relatively high income households. Third, we have the payroll protection program. So that's support for small businesses and for chain restaurants, basically, and hotels. So that's the idea there is small businesses do not have the kind of access to capital markets that larger businesses have. And so we are especially generous toward that. And so what the program consists of, it's basically 8 weeks worth of payroll in the form of a loan that becomes forgivable or that is forgiven if you maintain your workforce throughout the period for which you get this money. It's those 8 weeks plus about 25% on top of that you can spend on sort of your usual fixed costs. So that's a lot of money too. It's $350 billion. So that's really a core part of the bill. And then I'd say finally the sort of fourth part of the CARES Act is money that goes to the Federal Reserve for the Federal Reserve to make loans with, right? To backstop losses on those loans. And so that's a ton of money, because those $450 billion are only meant to cover losses, right? And so the Fed can lend much more money in that. And so that is supposed to go to businesses that are a little bigger than the ones that can participate in the payroll protection program. So that's through the so-called Main Street Lending Program. There are loans that go to backstop consumer credit. It's car loans, those kinds of products. It's also meant to cover loans to state and local governments and to the large corporates who sell bonds. That's the fourth big component. And then finally, there's a little bit of money, $150 billion, for state and city government expenditures that are directly related to the public health emergency. So that's sort of the big picture of what we've done. Sorry, that's a long list of money, but remember, each of these components would be an enormous program in normal times. It's, right. I think it's worth mentioning all of them.
And I think kind of focusing on a couple components of that, just last week, Americans began to receive those stimulus checks. And when describing the checks, as well as kind of the CARES Act, Treasury Secretary Steve Mnuchin characterized them as bridge liquidity for Americans facing the crisis. And do you think that these policies, the checks and the unemployment benefits, are strong enough to help Americans over the coming weeks or even months?
I mean, I think as these things go, I think it's a pretty good comprehensive response. I think that the mix of different elements is helpful in that, you know, it really shows an effort to make sure that that we're not forgetting categories of firms or households. You know, to the extent that is politically feasible. I think, for example, the 20 million or so undocumented immigrants, of course, fall through the cracks in most of these programs. And so I think it's okay. So I think the unemployment insurance program is very generous, and so obviously there were logistical problems at the state level there, especially in Florida. But once I think those checks start coming out, that's going to be really helpful to people who qualify for them. The payroll protection program for small businesses, I think, is both too generous and not generous enough. I think it's too generous for businesses that are doing okay, right? So in industries that are not harmed as much, because they really don't need a forgivable loan that covers all of payroll for 8 weeks. And at the same time, it's not generous enough for businesses in the industries that are entirely shut down, because the loans really only cover payroll plus a tiny bit of additional money. And if you're entirely shut down, if you lost all of your revenue, that will probably just not be enough to continue operating. But you know, but it is what it is. And so I do think that, and then, you know, obviously you have the loan programs for larger businesses. I think it's pretty good. And I do think that the notion of bridging a period is a good way to put it, a better way to put it than as a stimulus necessarily, because obviously, in a sense, we're freezing the economy for a period of time until the epidemic is under control. We're not really trying to prop up demand for restaurants and you know, sports events. And so I think that terminology is good, right? That we try to keep people's balance sheets intact, not necessarily trying to convince them to go out and spend money on goods and services.